Time for business then. Matthew's with us today, and after a strong start to the year, markets, they're taking a bit of a tumble, aren't they?
They are. We got so used to seeing those green screens, didn't we, this year? And then this week it's been red all the way. Third day of falls. Lots of worries about Greece and the bond situation, which we're going to talk about a bit later as well. European markets were bad yesterday. One bright spot in Europe yesterday, the Athens market managed to show some improvement. Otherwise, in Asia, markets are down. They're still open, of course, this morning. So let's take a look at how those are doing. All down across the board. We also saw some Australian growth figures this morning. They managed 0.4% in the last quarter, but that was lower than expectations.
And not much better in the US either, I guess.
No, US markets, now those have been up 23% since October when they hit their lows, but they've been falling. Lots of profit taking going on there, and we can see all in the red as well.
Cheerful stuff to start us off on a Wednesday morning, isn't it? Now, time is running out for investors to decide if they'll say yes to a deal on Greek bonds. With just one day to go, the government in Athens says it's optimistic enough will sign up to avoid a default. But if they don't, the country risks losing its vital next round of bailout money. Nicholas Rushworth has the story for us.
The clock is ticking and the stakes have never been higher. Greek private creditors have till Thursday night to say if they'll participate in a bond swap. That's a crucial part of the country's bailout deal. The Greek government is asking banks and other creditors to trade 206 billion euros worth of bonds for new ones with a longer maturity rate and backed by the EU. The catch? They will have to forgive some of Greece's debt and accept a major loss. So old bonds worth more than 200 billion euros would be valued closer to 107 billion. It's not an attractive deal, but without it, Greece would likely be forced into default. That would trigger credit default swaps, causing possible market panic. On Monday, a group of major bondholders backed the deal to halve the value of their Greek holdings, and Athens hopes between 75% and 90% of its creditors will also sign up.
90% might be challenging, but it's likely that the Greek government will have at least 70%. The biggest question mark is hedge funds. Traditional banks have all or most of them mentioned that they will bring the debt to the swap.
Along with a series of austerity measures, the bond swap would clear the way for Greece's next round of its 130 billion euro bailout from the IMF and the EU. Analysts warn of a catastrophic domino effect if the deal doesn't go through. A disorderly Greek default could cost the Eurozone up to 1 trillion euros.
Now, the vast majority of bondholders bought them under Greek law, and there was legislation passed 2 weeks ago, which means that as long as 2/3, as we just heard, their sign up, the rest can be forced to take them. What's worrying Athens are these 14% of bondholders who bought them under international law. They may decide to try and hold out and get their money back in full, but Athens was saying yesterday, forget that, we're not paying you if you decide to hold out, and that's to try and get them to sign up as well.
OK, now let's bring you a few more of the day's top business stories then. And big French businesses can expect higher tax bills if Nicolas Sarkozy is re-elected in May. The French president has pledged to get tough on large companies by setting a minimum corporate tax rate. Speaking on French television, Sarkozy said he was targeting large French groups that don't pay any tax in France.
Lehman Brothers has emerged from bankruptcy after its failure in September 2008. The bank's collapse is often billed as the start of the financial crisis. The legal move clears the way for the bank to pay back some of its creditors. It projects having around $65 billion to pay back the $350 billion it owes.
And the former finance chief at Porsche and 2 other managers have been charged with credit fraud. Holger Herter has been accused of lying about the company's finances during its failed takeover of rival Volkswagen. Prosecutors said the 3 managers are accused of understating the company's finance needs by 1.4 billion euros as part of a 10 billion euro refinancing.
Now, it's the biggest Ponzi scheme since Bernie Madoff. One of America's richest businessmen was jailed yesterday for stealing billions of dollars from his customers, and he'll be exchanging a jet-set lifestyle for some more austere surroundings. Stephen Carroll has the story.
He promised his investors a comfortable retirement. Now Alan Stanford could be spending the rest of his life in prison. The Texan tycoon, once one of the richest people in the United States, was convicted for cheating his clients out of more than $7 billion.
There's a little bit of vindication knowing that there were 12 other people that thought the same thing, that we were just scammed.
The court heard that Stanford and his assistant faked financial reports to keep investors sweet. But the pyramid scheme fell apart in 2009 when investigators became suspicious about how his business was doing so well. His defence team denied it was the evidence from his former assistant that secured his conviction.
I'm not sure it was any one witness or any one piece of evidence or a document that was introduced. Usually in cases like this, it's not just a person or a document.
Jailed since 2009, Stanford tried to have this trial delayed several times, including after a prison brawl which he said affected his memory. There are more court battles ahead, including a civil case from investors. Stanford is appealing his criminal conviction and won't be sentenced for several months.
And to wrap up the biz, we've got something that might improve prison life for him. A cupcake vending machine. Apparently the world's first has just been opened up, if that's the right word, in California.
Yes. So Paris has a baguette vending machine. Yeah. Now you can get cupcakes whenever you want.
Idea.
I know, this is from Sprinkles. This is a store, this is a chain of cupcake shops across the US. Let's hear from the company's IT director how this concept was born.
The concept actually came to our owner, Candace Nelson. While she was pregnant, she had a cupcake craving, so she decided, wouldn't it be great if she could go someplace where she could get a freshly baked cupcake at any time. So the idea was born, and here we are today with the world's first machine that allows you to actually come in any time, 24 hours a day, to get a freshly baked cupcake.
Yeah, so any emergency cupcake needs you have, you can, if you're in California, you can go along, you touch a screen, a robotic arm goes and picks up this cupcake. $4 it'll cost you, about €3.
€3. I suppose it's not too bad. I feel like if you could look ahead to a year's time here on France 24, if the two of us are still here and we've put on weight, we know that one has been installed on the second floor.
I would love that.
Yeah, I don't think it's a good idea. All right, Matthew, thank you very much. More from Matthew just over an hour's time, in fact, hour and 15 minutes here on France 24. He'll have more business for you. The latest news headlines coming up. I'm going to be here still, in fact, with the latest for you after the weather, so stay with us if you can.
In the United States, owning your own home is part of the American dream. But for many, the dream has become a nightmare. The country is gripped by its worst financial crisis since the 1930s. Every month, tens of thousands of homeowners are losing their houses to foreclosure. But people are fighting back. Our reporters went to Florida, the state that has been most severely affected, where one group of people helps these victims of the crisis to hold on to the American dream. Don't miss Reporters, Thursday 9:45 p.m. Paris time on France 24.
On March 11, 2011, Japan was thrust into chaos in a matter of seconds. A 9-magnitude quake strikes the east coast, causing the Fukushima nuclear plant disaster. 1 year later, the Japanese are still trying to recover by picking up the pieces. France 24 brings you unprecedented stories from across post-tsunami Japan. From inside the Fukushima forbidden zone to Tokyo, where quakes are daily and fear is palpable. Life in Japan, 1 year on, a series of special reports on France 24.